Well, the stock market continued to sell off, and many of you wondering what to do next. Well, I'm going to take my 30 plus years of experience and tell you how to trade a stock market crash. Plus, I'll do my regular weekly analysis of the stock, commodity, currency markets, figure out where interest rates are likely headed, and then finally, I'll look at the day trade of the week on Uvxy. So, three big down days in the market following the decision on interest rates from the US Federal Reserve. And it wasn't so much the rate increase that was the issue, it was more about the comments and the conviction that the Fed has to curb inflation with monetary policy. And that rattled investors and made them sell stocks yet again. Now, this weakness in the market did not start this week, it started some time ago. We had the first breakdown months ago, and I've been bearish on the market ever since because of that evolving weakness. And one of the things that you have to be very wary of when a market is crashing like ours is now is to not chase fear lower. You don't want to panic with the rest of the market. You want to look for your exit points based on pull-ups in the downward trend. Now I'm going to show you this on some charts in just a moment. But it's really critical not to chase a market that's running down and away from the trend line. Just as markets can go up with a parabolic trend, a curving trend upward, so too can markets go down with a parabolic trend, and that is a sign of emotion. I don't want to lead you astray here. I do think the markets are weak. I do think that there is a good chance they will be lower, perhaps in the weeks ahead. But in the days ahead, there's good reason to think that the market will bounce. And if you're looking to exit some positions, I would exit on the bounce and then the breakdown from the bounce. So again, I'll show you this on some charts in just a moment. Markets are at support. I'll show you that in a second. And also, even though the markets are going down, there are ways to make money from this, and that is through inverse ETFs and volatility ETFs. Things like the VIX, things like inverse ETFs on the S&P, the NASDAQ, the Dow, and then of course the Canadian markets have inverse ETFs as well. These go up when the market goes down. I would caution you on entering some of those next week simply because the market is a bit oversold. So let's jump to some charts where this starts to make a little bit more sense. So here you have the daily chart of the S&P 500, and the long-term upward trend first started to break there, and then we've been moving down toward the weekly trend line. We broke the weekly trend line, and now we have evolved lower again. Now, the most recent upward move, which was the summer rally that we had, was broken third week of August. So that was our first signal that weakness was coming. We then had a breakdown from a falling top right there, and we've had subsequent breakdowns from pull-ups in the last little while. So the most recent was a Tuesday a couple weeks ago when the market got sort of fear about rising interest rates. There was the CPI number, which was high, inflation was high, and that of course motivates the Fed to raise interest rates. So that was the latest breakdown. So now we have been moving lower for almost 2 weeks, and we're coming into support where the market will likely bounce. We are oversold, and we can just draw lines on here. So there's your trend line. We are far below the line, which means we are oversold. It's like this trend line there, when we were down here, we were oversold. And we managed to come back up to the trend line and ultimately break it, which was a good thing because we had that nice little summer rally. So now once again, we are oversold. We are approaching support, and therefore it's likely that early next week, the market will make a bounce. So even though it feels like the sky is falling today, there's a good chance the market will bounce. However, we should not overstate it. The market is still in a downward trend. Until it breaks this downward trend line, you should be relatively pessimistic. All right, so let's jump over to the other chart that I have here, which is the intraday chart of the S&P 500. And here's where you can learn how to trade this weakness in the market. When the market comes up like this and then breaks down from a pull up, did one here as well, breaks down, kind of did one here, and then a breakdown. And then, of course, on the Fed news, we had a more important breakdown. But you want to short or buy inverse ETFs, buy volatility ETFs when you get those breakdowns from pull-ups. And if you're buying an inverse ETF, it's going to be the opposite because, of course, those are going up when the market's going down. Do not sell when the market's oversold. Wait for the pull-up and then the breakdown of the pull-up. Wait for the pull-up and the breakdown from the pull-up. All right, so here was another pull-up. Pull-up, breakdown from the pull-up, market goes down. Pull-up, market goes down. Pull-up, market goes down. You see it over and over again. But when the market's been going down for a few days already, it's a little dangerous to sell. And you end up having seller's remorse, and then you buy back in, and you just get on this really negative cycle where you're always chasing your tail, where you're chasing after fear. All right, so let's now jump into my analysis of the markets as we always do. And we'll start with a longer term chart of the S&P. This is the weekly chart. And you can see that that long-term weekly upward trend was broken there, and then we broke down from a falling top there. And now we are testing support inside the downward trend. It's very likely that we'll bounce back, but do we do that? Probably. Could we? The other option that the market could do is we bounce, come up to the trend line, build a rising bottom, and then break it. And then we're back into a healthy market. I don't know what's going to happen in the longer term. We have to watch for that signal, either a breakdown through support or a break of the downward trend line from a rising bottom. But I'm quite certain that in the very short term, we will get a little bounce back. That bounce back could last a day. It could last 2 weeks. We don't know. If the market starts to break down through this 360 level on the S&P, then we're headed to the next level of support, which is 320, and be cautious with that. There's ways to make money from that. Again, inverse ETFs, so SDS, QID, there's a whole bunch of them, obviously. On the Canadian market, HXD, these things go up when the market goes down. And then, of course, there's the volatility ETFs. I'll just show you the chart of Uvxy because this one actually broke out today. So Uvxy is the ETF for volatility on the S&P 500 futures, and it broke up from a rising bottom today. We could see this move up. If the selling pressure accelerates, if the fear accelerates, then this could move higher. So this is one vehicle I think you should all keep an eye on next week. If we do break down through that support, start moving towards those next levels of support on the S&P, this is going to probably move up quite nicely. Way to make money from the market going lower. All right, how about the Canadian market? T.XIU, it's a very similar situation. Let's look at the 3-year chart. And there you can see we are in a downward trend. We broke the upward trend line. We're testing support. Probably bounce off of it, but I worry that we're still heading lower there. 3-year chart, that was that. 1-month chart, you can see we're oversold because we're far below the trend line. Oversold, far below the trend line, you come up. All right, so again, good chance we'll bounce back next week. Will that bounce last? Time will tell. How about commodities? Let's take a look at gold. I've been bearish on gold for a long time as well. It broke down through support 2 weeks ago and then did it again today. I would really avoid gold. It is headed lower. How about oil? This is where there's something interesting because oil was very weak on Friday and it broke down through this support zone. Lots of falling tops, so the sellers are in control. You can see the steep upward trend line was broken back in June. However, so that picture is obviously quite negative. However, when you look at the 3-year weekly chart, what you should notice is that the long-term upward trend line, which looks about like that, is very close to where we are now. So I think we could see another week or two of weakness in oil, but when it gets back to that long-term upward trend line on the weekly chart, we should bounce off of it. We may go a little bit below it during the week, that's quite normal, or even for a week or two, just kind of tickle below it, but there's a very good chance it will hold at that support price. So if you are looking for a place to look for buys, I would watch the energy market. Probably not on Monday, but in the weeks ahead, we may see a break of that downward trend line. Now, this is a great time to subscribe to the channel, turn on the notifications bell, because if I see that in these videos, I'm going to tell you about it. And these videos are free. Why wouldn't you subscribe? It costs nothing. And put on the notification bell, Otherwise, you could miss my updates. All right, let's move on. Let's take a look at, that's the Canadian market, oil, gold. How about currencies? UUP, going parabolic to the upside. That means it's getting irrational. You are far above the trend line, you come back. You are far above the trend line, you come back. Look at how far above the trend line we are. That should be another supportive element for stocks in the short term. Does it mean the trend is going to break? No, until we actually break the upward trend line, typically from a falling top, the US dollar is strong, so don't bet against it. But we are getting a little overextended to the upside. Bitcoin, GBTC, been a bear here for a long time as well, and it looks bad because we have broken down through this floor. We are just sort of going down on light volume. The buyers are on strike. They're not buying these things right now. All right. Finally, the TBT, which is our interest rate chart. Let's take a look at the 1 month, clear upward trend in interest rates, 3-year, clear upward trend there as well. Overextended. Here's your upward trend line. We are too far above it, and again, should pull back to it. That would be supportive for stocks. So you see all these things are coming together. The only thing we're missing is the little signal that we are bouncing. And I would watch for that because there's no guarantee it'll happen next week. Watch for a little bit of strength, breaking the pullback lines, and then you'll start to see it reverse perhaps. All right, so my ratings, still pretty negative on everything. Bearish on US stocks, Canadian stocks, gold, bearish on both time frames. On oil, I'm neutral long-term because we are coming back to that upward trend line where it should hold, but still the short-term picture is bearish. US dollar, bullish on both time frames. Bitcoin, bearish on both time frames. And the chart for interest rates is bullish, but of course that means interest rates are rising, which is a negative thing for most people. All right, let's jump into the day trade of the week. Even in this market, there's places to make money in the short term, buying things, and one of those areas is volatility. So I put Uvxy on my active live shortlist Friday morning because it was moving up. It's a good indication of market fear, and of course the market was breaking down, so it showed up. What I look for, just like I was talking about pullbacks to the trend line and then breaks up, we can do that as a day trader as well. So there was what we call an action candle right there. I'll color this in yellow. There was an action candle breaking a pullback from the high. So that was entry point number 1 on UVXY, day trade. In and out within half an hour, buy here, sell here. It did it again, pulls back to the trend line. Here's your trend line, right? Pulls back to the trend line, breaks the pullback, up it goes. Pulls back, breaks, up it goes. And so all day long it was grinding higher. Finally, the linear trend line was broken here, and that was time to be out of the trade. But in this case, if you're risking $100, each one of these lines is $100 of profit. So 100, 200, 300, 400, 500, 600, 700. Best case scenario, you probably exit here for like a 6-to-1 RR. That's $100 of risk, $600 of profit in a market that was miserable. That's a way to trade them. Hope you've enjoyed it. If so, click the like button, leave a comment. Where do you think the markets are going? Will we bounce next week, or are we going still lower? Love to hear what you think. Hope you've enjoyed it, and trade well.